Well, U.S. equities continuing to climb to record highs as emerging markets continue to fall under pressure. So what are the technicals telling us about the markets? Well, turn up the sound if you are one, because joining us now is renowned chart analyst Tom Demark, Demark Analytics founder and CEO. Most technicians use a lot of his indicators to make their calls. He's also advised hedge fund giants like George Soros, Steve Cohen, and has called every top and bottom in the Chinese market for years. Tom, great to chat with you. It's been a while. I want to start with the markets and calling a top. You're good at bottoms. Tops are a little harder to call, right? You're taking a look at consumer confidence and unemployment here in the U.S. as a guide as to when the market might top out. What do you see?
That's correct. What we found back in the 70s, when I created most of our indicators, we applied the market timing models exclusively to stock market, individual stocks, commodities, and fixed income. What we found in the late 70s, early 80s, they had application to economic indicators as well, but there wasn't sufficient data. Now that there is sufficient data, we've been applying them to the consumer confidence. We've applied it to unemployment rate, and you'll see on these charts that you have on the screen that they've coincided very well. In fact, 1970 bottom, 1974 bottom, 82, 87, 98, 2002, 2009, 2011, 2016 bottoms were all coincident with our market timing models for the stock indices as well as these economic charts. And then we saw the reverse at market tops in 73, 87, 2000, 2007. Mm-hmm. Right now, both these two key economic indicators are what we score at a 12. This month, September 25th, when they announce the consumer confidence, it'll score a 12. When it scores a 13, we're on alert that the market is very vulnerable long term. This is not a short-term indicator. And the same thing applies to U.S. Unemployment rate. Yeah. There we apply a 13 as well, but we look for the market, for the trend to turn in the other direction once we score a 13. But both of them coincide the end of October, first week in November. And this is what's so unique about it. This same indicator we applied to the market in November of 2016, and it gave a bottom on the Dow Jones Industrials 2 days before it gave a 13 bottom 2 days before the election. And then if you go back in time, we also, I don't know if you probably recall, we did apply it to the gambling charts that were produced in England, and they called the presidential election results as well.
Tom, based on that as well, the question then becomes, when do Chinese equities and when do emerging market equities bottom out as well? The Shanghai comp is near that 2016 low that we saw. What's your call on the Shanghai comp and emerging markets?
Well, Shanghai comp has worked very well with our indicators. This is historically going back to December of 2012 when we were on the air December 4th, and we said that's the bottom. We're going to rally 25%. We did in 2 months. Currently, we're at a 12 on a daily basis, and we should record a 13 tomorrow with a down close. What we like to do, though, is marry the countdowns, 13 being the key countdown, with our price projections, and our price projections are a little bit lower. So we could maybe be off by a day or two, but if you go back to February 9th, last time we were on the air with you, and you go back January and February of 2016 and the peak in January, we've been on your program every time the exact bottom day, and we feel confident with the Shanghai it should do the same thing, and the same thing with the emerging market index. In January, we were about 2 days before the peak, and we're within 2 days of a bottom there as well, as long as we have down closes.
Tom, great stuff. I really appreciate your perspective. It's been a while, so good to have you on. Tom Demark, Demark Analytics founder and CEO. So.
ยอดดอยอยู่ไหนนะเมื่อไรจะถึงนะก็ไม่กล้าซื้อกลัวจริงๆจะเจอยอดดอยยอดดอยอยู่ไหนนะขึ้นมามากแล้ว